Today, we're going to talk about a company called Atlis Motor Vehicles, and you may have seen this name in the news over the last several days because shares of the company traded over 700% when they debuted on Nasdaq. So we wanted to talk about this company because we believe it represents the sort of risks that most retail investors may not be aware of when they equate investing in an opportunity to investing in a real business. Now, this was a newsletter that came out yesterday. It's term sheet from Fortune, and they were talking about how Kathy Wood's new venture fund, which we published a video on several days back, is a horrible idea for retail investors. Well, maybe they should be talking about some of the other horrible ideas out there that are certainly a whole lot worse. You have penny stocks, Regulation A plus IPOs, SPACs, cryptocurrencies, ICOs, NFTs, crowdfunding ventures. What you'll find across all of these pitfalls will be a lack of institutional investors, typically, perhaps with the exception of cryptocurrencies. And SPACs, though, the retail investor ultimately gets the short end of the stick. But in particular, crowdfunding and Regulation A, these are typically avenues used by firms that can't raise institutional money, which is problematic. There's a reason that large companies won't invest in certain types of businesses. And when we talk about electric vehicles, so that's what Atlis Motor Vehicles is dabbling in. We've warned investors about electric vehicle stocks in particular, being that there are a lot of stories, and the SPACs that came out. These were companies that were able to raise a lot of capital through the SPAC mechanism. And you can see here on the left how that performance has been to date. So these companies are running into some problems because they don't have the capital needed to produce vehicles. And as a result, they're having to curb the optimistic estimates that they gave. And suddenly all these great promises of vehicles rolling off a production line are no longer there. And we recently covered this in a piece called "Is Searching for the Next Tesla Pointless?" We believe it is. And that brings us to the value proposition from Atlis. So you can see here they have this battery cell pack and then this electrification platform. We've talked before about why that probably isn't a good idea. The idea that you might be able to electrify vehicles, or you might be able to create, there's another firm that's doing this, create these components. And then you have the pickup on the right-hand side here. You see here, expected launch 2022. Well, we'll talk about that. And you're going to see that as a running theme throughout this presentation of estimates given that were not met. So the stock was up following their IPO revenues. They sold just under $3,000 worth of t-shirts. There's no firm date on when a vehicle will launch, so we're going to talk about a lot of dates. And when we look at crowdfunding and Reg A plus investing opportunities, we often see management teams that roll forward targets all the time. They raise capital as if they're selling lottery tickets, and a lot of the estimates they put forward don't pass the sniff test. Here's an example of the sort of incentives investors are promised, and it never would you see this sort of buy this many shares in the first 24 hours, receive a 30% additional shares as a bonus. This is just a joke. This is not how professional investors approach investing. So it starts to resemble more of a multi-level marketing scheme than it does a proper investment. But it works, and it helped them raise money. And you can see here that they've been raising money using the crowdfunding avenue for a while now. And we're going to look at these three different raises starting in 2018. This was their first crowdfunding raise, and at that time they had raised $40,000. That might get you a few admins in the Philippines, but little else. And they were hoping to raise $1 million to increase marketing and finish their prototype. That's a pretty cheap prototype. And they had plenty of perks. They said one investor will receive a brand new Ford Raptor, and then 4 other investors will receive an Atlis pickup truck, which they'll be waiting a while for that. And you can see here they said they're expected to begin shipping by late 2020. Well, the projections they gave, you see here, 2021, they'll sell 1,000 vehicles, $68 million. That's come and gone. They say they need $370 million, a very small amount of money to start an electric vehicle company from scratch and then reach profitability, which is what they were claiming they could do with a pickup truck that has a battery that can charge in 15 minutes and self-driving capabilities. And they had ascribed to themselves a valuation of $2.9 million. Well, they raised that money, the $1 million, minus, of course, the cost of the Ford Raptor and the $62,000 in fees charged by the platform that they raised on. Well, following year, they're raising again. Valuation jumps to $90 million. Now they expect to begin sales of the XP platform. This is a new product that they're debuting by Q3 2020. The pickup truck is expected to begin selling in Q1 2021. They talk about this $1 billion in projected reservation interest and go on to say that these reservations don't require a deposit and no down payment because they'd rather offer potential customers the opportunity to become investors. Okay, 2020, they're offering again, and this time the raise is looking for a bit more. They raised $14.8 million of the $35 million goal. Now the company is valued at $165 million, and in calendar 2022, they're targeting production of 4,000 XP platforms and 1,000 XT trucks. What you're noticing here is that these milestones come and go, but the relentless need to raise funding remains. On the right-hand side here, you can see the latest crowdfunding campaign that was paused when they began trading their shares on Nasdaq. And the company at that time was valued at $385 million. 12,000 people had put money in. And you can see the other numbers here that they had raised, $17 million, a drop in the bucket. If you're a company that's trying to build, market, and sell a electric pickup truck. So the IPO, this didn't actually raise money. It simply involved their shares trading on the Nasdaq. And for whatever reason, hype pulled those up, as we saw with electric vehicle stocks in the past, and they traded upwards of 700%. They floated back down to $63 a share, which is what they closed at yesterday in after hours. That's a $2 billion valuation for a company with less than $4 million of assets on their balance sheet. The latest 10Q shows they have about $668,000, though they've managed to continue raising using crowdfunding. And of course, a lack of funding put a crimp on their plans. And of course, the coronavirus means that they couldn't hit all those targets that they set. Here in their latest document, prior to when they began trading, they talk about how in 2022, we plan to become revenue generating and to secure sufficient funding to execute on operational milestones. They're going to continue raising money via crowdfunding. And they now the statements start to become more vague. We expect to finalize development of the production model and produce trucks in the coming years. All right. Well, they clearly lay this out in the risks of every one of their offering memorandums. Any valuation is pure speculation. Timeline and milestones are estimations based on how they're calculating, the estimates that they're giving. So they've clearly laid out the risks there. And when we look at the latest 10Q, they had, again, $630,000 in cash. At first, I thought this was actually thousands, and that represented millions. So I had added 3 zeros, and still it didn't look as if they would be able to execute against their plan. But they've burnt through $184 million. And you see here in the first 6 months of this year, they raised $8.8 million in crowdfunding and spent advertising of $3.6 million. So they netted about $5 million. And they have plans now to begin generating revenue in 2023, and in fiscal 2024, whenever that is, they now plan to start delivering trucks. And where the money will come from to make that happen, it's just unknown. What I guess they'll continue to raise money through crowdfunding avenues. And here's a picture of them ringing the bell. And you need to ask yourselves this: is that well deserved? So you could say, well, they did manage to create liquidity for their shares. That's great. That solved one problem there, provided the investors are able to now trade their shares. However, they have some responsibility to provide estimates that pass a simple sniff test. Is it reasonable to think that in that first raise that the $561,000 that they plan to spend on a functional prototype would actually accomplish that? Is it reasonable to think that a company going from zero from inception to profitability, selling electric vehicles in 6 years, will need just $370 million in funding. Is it responsible to make statements about delivering vehicles when you know the funding isn't there? And our question is, what's the likelihood this team ever delivers their handmade in America trucks? So they've decided not to go the route of automation and build their trucks by hand. So in conclusion, this is just a great example of why you should stay away from Reg A plus or crowdfunding offerings. Never invest pre-revenue, and let's start holding management teams accountable for what they say. The fact that nobody seems to be raising these questions is a big red flag. You have at least 12,000 people out there that ought to be pushing management as to why they keep slipping dates. And when you see a track record of wildly inaccurate statements, that's a huge red flag. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks for taking the time to watch this today.